Good morning, small players. Happy Monday. Today is Columbus Day. The bond markets are closed, but the equity markets are open, which means, another fun day for us trading in the chat room. On the left-hand side here, we have our pre-market gappers. These are stocks that are set out to open higher than their closing price from the previous day. Outside of just that gap up in the price, we also scan for above average relative volume as well as high short interest and low float. That's our strategy. This one gapped up over, well, I guess 100%, almost 100%. I do like that it's forming a 5-minute flag right now. We see there was one flag break here, one flag break here, one flag break here, forming another one now. Still not has not triggered entry, obviously, but we see that it has had good resolution of flag breaks before, so it has shown us that traders are looking at that setup, so we definitely be interested in that. The high of this candle is 10.1, so the flag break trigger would be 10.11, right? We just set it up 1 cent over the high of the previous candle, and what that is we like to also call that the first 5-minute candle to make a new high. Happens to also be my favorite setup. The reason why I like it is because it's normally very quick. I'm not very patient. You guys know we talk about this often. The amount of time we spend in a trade is a serious risk when it comes to these stocks. So we don't want to, overstay our welcome when we're trading them. And then the other thing is that it sort of gives you a very very clear trade plan just by the previous candle. So the entry is 1 cent above the candle, and the stop loss is 1 cent below the low of the candle. And then normally we just use the previous candle's resistances for profit taking, right? So it sort of gives that very clear trade plan. I'm going to just mark these levels on the chart. If it dropped to 9.4, that would be nice. It seems to have nice support there. Which could be nice, yes, because for this flag break right here, the high of this candle is 10.16, which is technically the first resistance. So if it were to break flag at 10.11, you have the first resistance like 5 cents above, which is a little tricky to execute. It would be nicer if it gave more of a pullback, like even to this level here of 9.65, which is the high of this candle. So we know there's some resistance there. Even that level would be nice, just to have a little more risk reward. But if it broke flag, again, that's my favorite setup, so I will trade it if it happens. So let me just clean up the watch list from last week. Okay, so that's that for that. Let's see on 1-minute chart where EMA is. EMA is here. We're just dropping below it, so that's another good, reason to hope for a pullback towards level of support. I mean, we can even chart the 65 one because that breaking above EMA on the 1-minute chart is going to be more difficult because that line, the EMA 20 and 1-minute chart normally is trailed by the stock as support when the stock is really bullish, and then once it goes below it, we know just like any support that's broken, it becomes resistance. So when you have a flag break at such a key level like that, you have more opportunities for a breakout. So I would like, it would be safer to trade a bounce there. But we can trade either, and then when we're aware that we're entering a setup that's riskier than our ideal setup, we can just, reduce our position sizing. Okay, let's go to the next one. Oh, I skipped this one. I don't remember why. Oh, yeah, because I just don't like these. There's nothing, not much movement. Yeah, I did have have this big push when it dropped news and what do we call those? Excuse me, bots bought it up. But since that point, there really hasn't been much movement. Let's see what the ADMS. Oh, I want to see what the float is, but I messed up. Yeah, I mean, I don't have these, but let's see what the float is to see if we'll even bother figuring out entries on this one. 44 mil, it's a little higher than what I like, but not by too much. I just never, I apologize, never really see much movement from these stocks that don't have that much of a range. And right now, obviously, it's below VWAP, so nothing interesting for me at the moment. If it touches this EMA 20 line around the 750 mark, I would trade, EMA bounce to VWAP. Otherwise, these are the levels that it's sort of, forming resistance and support on that we can watch for break above. Yeah, not too excited about this one. This one I like more. More obvious chart, and then we have this resistance here of 35.1. Then we try to break a little above it. 35.1. It's probably 35 if I think about it. That is a high of this candle. 34.8. If we were watching where this rejected, and at the time we saw time and sales, we'd know exactly where the resistance is. I'd probably watch. This is 35. It's just such a clear. It's a psychological level, so it seems like shorts are really defending 35. We've had one rejection, first test, second test, third test, fail. So let's say break above 35 here is trigger for a short squeeze. And remember, pre-market, these alerts don't work, so you have to watch it. PTGX. And then we can look at this. The high of this candle could potentially serve as support. 32.8. I don't like reversal trades like that in no man's land, but a lot of traders in our chat room do take them. For me, a reversal trade, I like to wait until EMA 20, and then if it doesn't hold the EMA 20, I don't care about anything below. I don't trade those reversals. And then if it breaks above 35, the next squeeze level is this break above this level of 36.75, which I'm gonna also set an alert for. Cool, I like that chart. IKEA, I remember IKEA. We traded this like, I want to say a year and a half ago. It had a pretty insane move, and then I really haven't been seeing it on the scanner much. Every now and then it will show up on the lower end of the scanner as just a lower volume stock, but not much more than that. We're seeing a lot of pressure here around the 94 mark, so a break above that level might give a move. It's a little cheap. You guys know I don't love stocks below $1. I'll trade the ones that are close enough to $1 like this one because they tend to have this mentality of wanting to hit a dollar, and then you sort of have that trade in mind. Oh, I'm waking up this morning, you guys, on Columbus Day. It almost feels like not right that we have to trade, on a day that like bond traders have off, right? But it's all good, right? We love doing this. More opportunities, more trading days helps with our daily goals when we have more trading days in the year. I like this one because it has such clear levels. And we see it had a flag break here, which had nice resolution. I don't remember ever trading it, so EZFL. I love the float on this also. This one's an easy squeezer with that float. just breaking a 1 minute flag here. We love to use the 1 minute chart also when you have this very, increased volume. If you have missed the 5 minute setup, obviously the setup here was break above 395, right? We charted that level on 5 minute chart, and then on the 1 minute chart, you can see it even more clearly because as soon as it broke above it, look how hot, like what happened to that volume, right? It exploded because it squeezed. That was the obvious squeeze level. And then it went down and tested it as support and perfectly bounced there for another move. So if it went down and tested again, at this point, that would be second test. So second test of support are weaker than first. The more we tested, the weaker it is. It's still something I would trade. Third tests I don't trade because those are normally short setups. So, it's basically what I wanted to say is if you miss a entry in a 5 minute chart, which was the break above this level 350, 395, then you open the 1 minute chart to try and catch an opportunity. So if you had just missed it, you would have totally, caught the bounce opportunity, right? Now that we've missed the bounce too, we can wait for a second bounce, or we can wait for the next 1 minute flag break because it's, forming another one. We have to be careful with those now though because the volume's dying out a little bit. This one's a very low float. It's 10 million. It's what I love trading. It's so easy to move those. They don't really require an insane amount of purchasing to move a pretty big amount. So for that reason, there's sometimes I'm a little bit more aggressive on them because even though a 1 minute flag break is a riskier trade than a 5 minute flag break, with this one, if only a few hundred traders look at it, it's enough to move it. And it just had one successful one, so then I can say to myself, okay, well if it has another one looking at this, I could maybe expect that there's traders that will looking at this setup and potentially take a trade because you need other traders to push it up for you, right? If you're trading, and that's why it's so important to have the correct scanner because if you're trading something that no one else is, there's 7,000 stocks out there, right? So if you're just like picking random stocks, I don't know, from Reddit or Twitter or whatever, and you're charting, you're drawing your flags, you're drawing your support and resistance, it doesn't matter. Remember, when it comes to technical analysis, it's sort of self-fulfilling prophecy, right? No one can really say it works because it works. The only reason why it works is because enough people believe in it that they will act on it, and then it's a self-fulfilling prophecy, right? So traders is saying, hey, if this stock, breaks above 95, I expect to see a short squeeze. Enough traders see it, enough traders buy on a break of 395, they start pushing the price up. That starts triggering the stop loss orders for short sellers, and the short squeeze does happen, right? Same thing for support bounces. Enough traders are saying, okay, this level used to be resistance, it should now be support. I would expect a lot of buyers to come in there. I'm going to buy because I'm going to expect the price to go up because buyers are going to come in. Okay, so I am buying there because I expect the price to go up. 1,000 other traders do the same thing because that's what their technical analysis shows them. And guess what? The price goes up. Why? Because enough of us believe it will go up, that enough of us buy that it does go up, right? That's really what technical analysis is. It's self-fulfilling prophecy. If tomorrow everyone stopped believing it existed and stopped using it, it wouldn't work. It's not some dark magic or, way to predict the future. It's literally just setups. That's why I like to use simple setups because I know the majority of the traders will look at them. If you start complicating your setup too much, then you're the only one really looking at it. People start using some weird indicators that no one knows about and think they're the secret to the markets or whatever. The secret to trading small caps is just trading what everyone else is because their float is so low that if enough retail traders are trading it, it is going to move an insane amount. So instead of overcomplicating it, all we really need to do is trade what everyone else would be trading, the obvious stuff. So obvious here at this point would be bounce on VWAP, right? That's 399, so it's a full number, a psychological number. We know the 395 is the support. If it goes down to test it for a second time, obviously we take that too, but VWAP could be a strong support. We might not be able to break below it if we still have the volume and the momentum. I would still, even if I took a VWAP bounce, I would still use this 95 level as the support level as a stop trigger, so break below it. BT, another stock that we've been trading a lot of volume on this attempt to break VWAP. I would take that on break above 12 because it seems like it's struggling a little bit with VWAP. We have to also note that like now we're getting into territory where these stocks are all below 1 million shares traded at 8:30. So it's a little early to think about them in terms of pre-market trades, but we can, think about them in terms of trades later in the day in the pre-market session or on bell. I'm going to put this on VWAP for the alert. BT, definitely interested in that because it's been moving so much. It's a name that traders will know and understand. This one's also been on scanner quite a bunch. I mean, it's still very light on volume, so I think the float is a little higher on this one. Let me check, because for whatever reason, every time I see it, I'm not too excited about this stock, so maybe at some point. Oh, 3 million. That's very low, so I should be very excited about it. It's a good thing we checked. Okay, we have the levels. I mean, it's a little too early for it right now. This one also shows up on scanner quite a lot in the past, has shown up on scanner quite a lot in the past few weeks. Well, this one's a famous name also. I just don't want to overcrowd my watch list because then I have way too many things to look at. And then it defeats the purpose of creating a separate watch list if I, put every stock on the scanner on there. Let's see what happened here. This one still has not broken the flag. It is, on this support level of 65. We see we've touched it twice. Still struggling at this point. Flag break. Oh, this one's actually a non-successful flag break candle, right? Because we had the 983 as high of this candle. This one got to 985. Probably didn't get enough volume to push it up. So this was technically the flag break candle. I mean, that's a pretty candle, but not enough volume increase, I suppose. It might just have a delayed reaction, actually, because that's a pretty candle to break flag. I wouldn't, expect a candle like that to create a false breakout, even though it does look like a false breakout right now without, like, normally on a true breakout, you have an increase. This candle should be up till here in volume. However, sometimes these guys do have a delayed reaction, so then the second candle has like that explosion. This is a trustworthy candle to me. This shows a lot of buying, so I wouldn't consider this a fake out. I would just consider it maybe a delayed reaction. It has a little bit of a spread. And see when the volume slows down. That's the other risk when you trade pre-market. When on lower volume, the spread opens up, and sometimes you think there is no spread because at the time the stock is moving like this, so there's a lot of volume, so the spread closes. But then now, as it's slowing down, it opens up a 6-cent spread. That's significant, in the ranges that we're trading at, especially this one. Like you're fighting for 20 cents profit. If the spread is eating 6% both ways, you don't have, 6%, 6 cents both ways, you don't have a lot of range left to trade with. So sometimes if there's no safe way to trade with that spread, I'll avoid it and wait until later in the day when volume picks up a little bit. Again, this one, I think when volume comes in, the spread closes and there's enough volume on the day, so it doesn't seem to be, that big of a problem, but sometimes it is. Sometimes you'll have on a $10 stock a 20-cent spread, which is very hard to trade. And, it eats into gains. It eats into your entries and it eats into your exits. So it closes the range that you can trade in. We went over timing sales in great detail in the, I want to say, maybe 2 episodes before this one. I have a playlist for all the morning charting that we do. Be sure to watch it, on a weekend if you haven't been watching these regularly, because in every one we do like a learning lesson. Knowing how to read timing sales is really, really crucial to trading, and a lot of people don't know how to do it. It's a little, difficult to understand by yourself. In that video that I'm talking about, which again, I want to say maybe was on Wednesday of last week, we go in talk about time and sales in great detail and show it on the chart and then explain the spread and level two. So that really helps with trading, just understanding it, because it's like a whole other language. You learn technical analysis first as a separate language of the charts, and then this really is a language of supply and demand. So very important to use both. You can, I couldn't trade without time and sales. There's just way too much valuable information coming from the tape. So this one did break above 35, cause a squeeze like we were expecting, is now fighting to keep 35.5 as level of support, which is great, very important, because if as the stock moves up, if we are building higher levels of support, we're supposed to be building higher levels of support, because technically if we were in this trade, granted this one still has a higher float, right? It's a more expensive stock, so higher spread, I'm sorry. It's a more expensive stock, so the spread is not as big of percentage of the price, even though it's a 20 cent spread. It's not like it's a 20-cent spread on $10 stock, but still significant when we're talking now about these ranges, right? So anyway, as the stock moves up, we wanted to build higher levels of support, because then if you're in the trade, you lift your stop loss every time it does establish a new level of support. So right now, if you were in this trade on 35 breakout, obviously you would have taken profit. At this point, you might be even out of the trade if you've taken profit on every quarter, half dollar and full dollar, because it hit 35.5, 35.75, and 36. However, if you wanted to keep some for this breakout, which wouldn't be wrong because it is a key level, you could potentially still have some shares left, and you would want to lift your stop at this point, right? Because you picked a successful entry, it had great resolution, you've taken your profit. At this point, you don't want to be losing on the trade, right? You want to make sure your stop loss is higher than your entry, or just at a higher support level that's being established. And granted, with the pre-markets, if you're trading and you don't technically have a stop loss, but you still need to know where your risk is and then manually exit if that risk triggers. So obviously, once we had this breakout above 35, right away you can lift your stop right below 35, because it was key level of resistance. We're now above it. It should be support, easy, right? But also, if on your last portion of your shares, if you get stopped out below 35, you still take a little bit of a loss that can eat into your gains. And ideally, you would want to see the stock form support here in 35.5 and then lift your stop below 35.5. It hasn't, right? It wasn't successful forming it. So then you can't prematurely lift it, because then you get prematurely stopped out. So you sort of, still stick with your previous support. But then if it does break above it, then we know, okay, this was the key level of resistance, should not be a support, then I can lift my stop up. Right now, you can also look at it for re-entry or an add, right? This 35 level that was big resistance, we never tested it as support. So if it does drop to that level, that would be first test of support. First test of supports are very strong. They're stronger than second and much stronger than third, which we know are short setups, right? So basically, if it were to test it, we would expect a lot of buyers to be waiting there. It's sort of bouncing right above it. Sometimes that happens a little annoying, because basically we see that there's a lot of selling here, right? So when there is this much selling, we know short sellers attacked it there, right? Short sellers trade with the same levels we do. They know that 35 is a very key level for buyers to come in. So basically what ends up happening then is that they need to close their positions before the stock hits 35. Why? Well, because they don't want to get short squeezed, right? They don't want to deal with the buying that comes in there and eats into their gains, even, right? Even if their stop loss doesn't get triggered, and even if they don't lose money, still significantly eat into their gains. So they will close it. And then if a lot of long bias traders are watching, they'll be like, oh my god, it's bouncing like right around 35, I'm gonna buy. So then they'll buy like, somewhere in that range. They'll buy like 35.05, 35.10, whatever. So which is fine. You know how we say you never really want to buy at the absolute lowest. You want to see some buying come in. But the fact of the matter is that the buying on this candle was just short sellers closing their positions, right? So what that ends up happening is forming a bull trap, which literally just happened as we were talking now. So you have the short sellers closing their positions, but you have not had the true buyers come in that were waiting with orders here on 35. Now we're seeing the true buyers come in because their orders are waiting on 35. So you'll have the short sellers closing, and then you have two eager buyers coming in to buy a little too soon. And then on this 1 minute flag break, which again, if you were waiting for 35 bounced above it, you didn't buy, you can say, okay, well, this is my next shot. 1 minute flag break, you could still probably get out alive because we know 35.5 is a very key area of resistance. So maybe you sold a scalp. But if you didn't, if you were expecting this to moon, this is a clear, fake breakout, and this is called a bull trap. When short sellers will close above support, bulls are too eager and think buyers are coming in sooner, so they come in enough to break above this level. They are, strong enough to do that, but then short sellers are way too strong and then just slam it down. We need true buyers to come in to help us, and that's on these key levels. True buyers, came in here, but we're not seeing a lot of volume, right? So maybe too many buyers were eager here, and then there were not enough buyers for here, because maybe now buyers are like, I'm gonna wait, for a lower level. But it wasn't on this 195 the true level of support, so maybe they're waiting for that level. I'm surprised not many buyers came in here looking, judging at looking at the volume, right? We see a perfect bounce on that level, so we know buyers came, and the body of this candle is bigger than the body of this one. So at that specific moment, maybe buyers had some control, but then you have this candle that literally ate up all the gains that this candle did. So it just shows you that sellers are stronger now. So when that happens, we can, look at the 5 minute chart. Maybe VWAP bounce could give more buyers to help break it. At this point, one would also just maybe already be in the trade, right? Like 35 bounce was a perfect trade. There's no reason not to be in it. But it's okay once you're in the trade to have doubts, because remember, trading is not about being right? So you have to react to what you see, and what you see is that not enough volume came in. Now we have a long consolidation. We know that short sellers love indecision. So at this point, what I would say to myself is, okay, this is taking way too long. We didn't get volume. We're giving shorts way too much time to, break us below 35. So this is now almost like third bounce on 30, right? Second true bounce, but this one was too close. So this is again now setting up a short position for them. Spreads opening up, which, is good, because shorts, as much as we hate spreads, shorts hate them more. So maybe they won't instantly slam it down, but at this point, it's really setting up a setup for them, right? So we know that they could be squeezed about 35. At this point, if you've taken a 35 bounce, you can say to yourself, okay, I can close out here the last portion of my trade for 10 cents profit. It's not a lot, but it's not a loss. I can close it out and, lift the trade another day, wait for a VWAP bounce where I can get more buyers, because obviously no buyers came in here. Look at this volume. So maybe, I get more buyers in VWAP, or I can wait for a breakout about 35.5 where I expect short sellers to get squeezed out. And then sort of just patiently wait for one or the other because you're too scared here, right? And no one's to say that this won't, for whatever reason, finally find enough buyers in 35 on the third test and come to here, and then you've missed out on this like 50-cent, trade. But the way I like to trade is just be safe, because sure, that could happen, but it could very easily flush. And, why risk, right? This is not, I oftentimes talk about, it's not a casino, right? It's not like, let's try my luck. We just go with high probabilities. What is the highest probability that we will be able to get out of the trade alive? So they're getting squeezed out now on 35. They're trying to defend it. We see, they were very aggressive slamming it earlier. We have some volume coming in. Long bias traders should be able to establish this level now, right? Apparently enough of them came on 35 to help start squeezing shorts. they can't lose this. If they lose this level now, that's showing too much weakness. They should have enough strength now to go and try and test the next level. And then, a break above this level we know is the next short squeeze area. Well, the next more massive short squeeze area, but I would even, this is where they started shorting, right? So say break above 36 is the first one that can help us push to this next one, right? So those are really the key levels to watch on this. Obviously 35, 36, and then 36.75. Those are probably going to be levels that we will use to trade all day. Spreads closing a little bit. Still not too much volume increase. Look at this. I mean, where are you, bulls? Okay, sometimes I get too carried away and these become too long, but I hope this lesson was helpful. I hope you guys, pay attention to how we draw support and resistance to determine where buyers could end up, short sellers could end up, profit taking could happen, etc. Because that's really all we do. We determine levels of support and resistance to determine areas where supply can overtake demand and demand can overtake the supply, and then we just trade with them all day long. I will see you guys tomorrow. Happy Monday. Have a great week.